Good morning, everyone. It's Mike again with House Flipping School, and on the previous video we talked about OPM, which is other people's money, and it's how to utilize their money so that you can get involved in real estate investing and house flipping when you might not have any money in your own, or you might not have a bank that's going to work with you. So now, you've been to a couple of Real Estate Investment Association meetings, you met other investors, you talked with people in the business, and all of a sudden you got a deal come your way. And you want to get it under contract, but you had no money. Well, two things. One, if you were already working the money trail and you had some potential interested people, and now that you have a deal, well, the idea is to put the two of them together. But most importantly, if you already had some people that were interested and they have some money, when you do get that potential deal, you want to make sure it's the right deal. What I'm finding in this business is a lot of new investors, or newbies we call them, they focus so much on the price, and they probably focus on buying properties under $100,000. And I know firsthand because they've come up to me and say, hey, I got this property under contract for only $80,000. I just experienced one in my town of Wareham, in a neighborhood called Onset, and the wholesale that wrapped it up didn't quite understand the market, and it was really overpriced. It wasn't worth $40,000. So you want to be careful and not just think the lowest priced house is going to be the great deal. And how do you determine that? Well, it's called ARV, and this is very important. So I want you to write this one down. ARV stands for after repair value, because that's where it all starts. You want to almost work there and work your way back. Well, how do you determine after repair value? Well, after repair value is nothing more is what is that house going to sell for after you fix it up and get it in new-like condition. You may not know that, so you have to rely on your experts. It's part of our team building that we talk about in our coaching and in some of our ebooks. But if you have a good real estate broker that can determine what that house can sell for after you fix it up, then from there you work backwards to determine whether it's a good deal for $80,000 or not. And then at that point you have a solid projection for your lender, or the person that's lending you the money, so that you can go to them and tell them how you have a real good deal, but you can back it up with data and information. So that's the lesson for ARV, after repair value. So again, any questions you have, feel free to email me, leave a comment, and I'll be happy to respond to it. So thanks again. It's Mike with House Flipping School.
Good.